Welcome to the Goose Hollow Capital Weekly Market Update. In this edition, we recap recent events, preview what's on the horizon, and share some interesting charts that caught our attention.
Welcome back for the deep dive this week. Okay, so you've sent over a really interesting mix this week. Market trends, global hotspots, even public health.
It's fascinating how these things connect.
Exactly. So first up, remember the dot-com boom when it seemed like every day a new tech company was going public? Feels like forever ago.
It does, doesn't it? The data shows a huge drop in U.S. tech IPOs. Back in '99, 315 tech companies went public this year, a tiny fraction.
A tiny fraction, like someone hit the brakes. Why is this important for you? This trend, it impacts everything. Innovation, investment opportunities, even the job market.
Fewer IPOs, fewer chances to invest early in potentially revolutionary companies.
And it's not just about missing out on the next big stock. This impacts the heart of innovation. Going public, it's like leveling up. They get access to capital, fuels growth, helps them attract the best talent.
Precisely. Why are tech companies avoiding the public markets? One key factor is the abundance of private capital. Private equity, venture capitalists, they're pouring money into tech, allowing these companies to stay private longer, achieve those big valuations without going public.
Like a private dinner over a huge concert. You get to choose who's at the table.
That's a great way to put it. But it's not just about staying out of the spotlight. The economic climate plays a role. Uncertainty, rising interest rates, increased regulation, not exactly IPO friendly.
So is this the new normal? Or will tech IPOs come back?
That's the million-dollar question. Some experts think it's temporary, others see it as a fundamental shift in how we value and fund innovation.
Definitely something to think. Something that caught my eye this week. China's stock market. They've been killing it recently.
Yeah.
Especially after, let's just say, some guidance from the government.
Right.
But here's the thing that I don't get. China's market is like defying gravity, but the U.S. tech IPO market is totally stuck. Like, it's slowed down a ton compared to, say, the dot-com boom.
You put your finger on a really important contrast there. It reveals a lot about where we're at in the global economy. Those charts you shared, especially the one comparing, what was it, the KPE ratio?
Yeah, the KPE ratio.
Right, of the S&P 500 and the Hang Seng Index in Hong Kong, they highlight this divergence we're talking about.
So for those of us who don't have, like, economics degrees, break down the whole KPE ratio thing for me.
Sure. Think of the KP ratio as a kind of stress test. It's measuring how sustainable a stock market's valuation is. And a low KV ratio, that often means the market is undervalued, like it might be ripe for growth. And China, their recent dip below a CAPE of 10 has definitely got investors' attention.
I bet. Especially since the last time the U.S. market saw numbers that low was after, what, the 2008 crash?
Exactly.
Okay, so, like, are you saying we should all be shifting our money east? Investing in Chinese companies?
That's the million-dollar question, isn't it?
Right.
But if it were that simple, everyone would be rich. It's not quite as straightforward as just, oh, low CAPE ratio, time to invest. You see, the Chinese market, well, it plays by a different set of rules. The government's influence is way bigger than in Western economies.
Ah, so it's not exactly a level playing field.
Right. However, this low AP, combined with the U.S. tech IPO slowdown, it does make you think. It presents a fascinating dilemma. On the one hand, you've got this potentially undervalued market with the government's backing. But on the other, you've got U.S. tech companies choosing to stay private longer, maybe because they're unsure about the economy, maybe worried about regulations.
It's like this giant game of investment chess. Each side is making these calculated moves.
Exactly.
So for someone like me, who's, not exactly a Wall Street whiz, what's the takeaway here?
It underlines how important diversification is and understanding what's actually driving different markets. You can't just jump in blindly. This low CAPE in China could be a really good opportunity for investors who are willing to look beyond the U.S. markets, especially with things in the U.S. tech sector being kind of uncertain right now. The stability of those private investments is starting to look more appealing.
So a bit of a global balancing act then.
Yeah.
Got it. But okay, switching gears now. Completely different part of the world. Argentina, not exactly known for a stable economy, but their stock market is booming.
Right, you point out that contrast. Argentina's history of economic ups and downs, it makes this recent boom very interesting. Their Merval Index has actually been the top-performing equity market this year, worldwide.
Head scratcher, right.
Yeah.
But we dug deeper, found out about a new investment law, RIUI. And let me tell you, it changes things.
This radio law, it's a bold move to attract foreign investment. We're talking tax holidays, depreciation benefits, even guarantees for foreign exchange.
Sounds tempting, but here's where it gets interesting.
Argentina has a history, let's say. Policy reversals, economic turmoil, not unheard of. So these incentives look great on paper. Investors are understandably wary. It's like finding a five-star restaurant with amazing reviews, but it's in a sketchy part of town.
Okay, great analogy. So with that in mind, where are the opportunities? Billions are pouring into energy and infrastructure in Argentina right now. If you're in those sectors, this could be huge.
However, and this is big, however, Argentina's massive agribusiness sector is completely left out of these RGI incentives. Why? That's a question worth considering, especially for investors. It might signal some internal priorities, maybe even vulnerabilities within their economic plan.
Definitely unusual. Now, before we get to the Middle East and those escalating tensions there, and we're getting there, let's talk public health.
You know, while everyone's focused on COVID, the U.S. is dealing with a whooping cough outbreak, the worst in a decade.
A decade. That's crazy,
That
especially with vaccines, right? Shows that even with all the advances in medicine, public health is always changing. And it's not spread out evenly. We're seeing cases concentrated in certain areas.
Exactly. And that's why it's important to understand regional health trends for your family. It's not one size fits all. This outbreak is a good reminder to check with your doctor about your vaccinations.
But since we're talking about alternatives for a greener future, what about green hydrogen? There's been so much buzz around that lately.
Green hydrogen is super interesting. It has the potential to be a real game changer for a more sustainable future.
Totally. And it can be produced right here in the U.S., right? So we wouldn't have to depend on other countries for it.
Exactly. It could be huge for our economy.
Okay, so green hydrogen, what is it exactly?
Basically, it's hydrogen that's produced using renewable energy sources like solar and wind power. What makes it so special is that it's a super versatile energy carrier. You can produce it pretty much anywhere, store it, transport it. Then you can use it in all sorts of ways. Heavy industry, power generation, you name it.
Wow. It's like the Swiss Army knife of clean energy then.
Exactly. And because it's so flexible, it's a great option for those industries that are really hard to make electric, like cargo ships or certain types of manufacturing.
So it's not just about, like, hydrogen cars.
Oh, not at all, though that is one exciting application. Remember our conversation about electric vehicles and the whole issue with batteries and flooding?
Yeah.
Well, hydrogen cars could actually address some of those concerns. Instead of those big, heavy battery packs, hydrogen cars use hydrogen gas, which is then converted into electricity.
So no more worrying about battery fires after a flood.
Exactly. Plus, refueling is way faster with hydrogen, and you can potentially go much farther on a single tank.
Like the best of both worlds then. The clean energy of an electric vehicle without some of the drawbacks.
Precisely. It's about having the right tool for the job, and in some cases, hydrogen might just be the better option.
It's fascinating how quickly things are changing in the energy sector. Hotspots and travel. Let's shift gears to a region where things are really intense. The Middle East tensions between Israel and Iran are escalating. It's something to be aware of, even if you don't usually follow international news.
This goes beyond just talk. This week, Iran launched missiles at Israel, the second time this year, this time targeting Karg Island.
And why does that matter? Well, Karg Island handles most of Iran's oil exports. It's strategically vital and vulnerable. Remember those maps we've seen? The locations of Iran's key facilities. It's like a bullseye on their energy infrastructure.
Exactly. Huge implications for global oil supplies. Will the markets ignore this, or could we see disruptions? Higher gas prices.
Because if there's one thing we've learned, geopolitical instability and gas prices, they tend to go together.
Yeah, one historical parallel, the 2003 Iraq War. Remember how the markets reacted? U.S. Treasury bonds, usually a safe haven, they took a hit. But the S&P 500, it rallied after that initial uncertainty.
So a stock market surge if this conflict gets worse.
Hold on, the past isn't always a predictor. The geopolitical landscape is way more complex today than in 2003. The U.S. is involved, but so are Russia, China, regional powers, each with their own goals, alliances. It's a balancing act. Any misstep could have global consequences.
Sounds like we need to pay close attention to the Middle East. Speaking of things that need attention, that book you recommended, Why Machines Will Never Rule the World, it really got me thinking about AI.
It's fascinating, right? Everyone's talking about AI taking over. This book challenges that, can machines truly think like humans? The authors argue they can't.
And why not? Break it down.
They talk about the mind-body problem for machines. Basically, the human mind, it's so complex, the ability to learn, adapt, feel emotions. They argue algorithms can't replicate that no matter how advanced they become.
It's more than just processing power. It's about consciousness, experience.
Right. And they talk about machine learning's fatal flaw. AI is great at specific tasks, chess, writing realistic sounding text, but struggles with the real world. It's dynamic, unpredictable.
Makes sense. A self-driving car, we program it with all the rules, tons of data, but it'll still have problems with things human drivers don't even think about.
Exactly. That unpredictability, the constant action and reaction in the real world, that's at the heart of their argument against artificial general intelligence, the kind of AI that can truly think and learn like us.
So what does this mean for us? Should we be relieved? Maybe a little disappointed the robot uprising isn't happening. It makes you think about all those movies, right?
Yeah,
But even without robots taking over, it feels like we're at this crossroads, incredible tech, but real human challenges too.
definitely. On one hand, this push for innovation, AI, electric vehicles, even countries like Argentina trying to adapt to this changing landscape.
And on the other, those old geopolitical tensions, diseases coming back, even those unexpected consequences of the very technologies that are supposed to help us.
Your vehicles, for all the talk about going electric and it's good, there are downsides people forget.
Those EV battery fires. After floods. Those pictures from the hurricane, flooded EVs, and first responders worried about getting electrocuted. Nobody thinks about that when they're picturing their shiny new electric car.
And it's not just immediate electrocution. We're talking about delayed fires, even after the flood's gone.
Wait, seriously? So a car looks fine after a flood, but then days, weeks later, the battery explodes. How?
Chemistry, salt water eats away at the stuff inside those batteries. And here's the thing. That salt water, as it dries, it leaves behind salt deposits, concentrated, inside the battery, like a ticking time bomb.
So not the water, the salt it leaves behind. Wow, that's fascinating. It's scary.
It shows how hard it is to make truly waterproof batteries, especially with vehicles in unpredictable, dangerous places.
Makes you wonder, should we be going slower with all this? What if you're trying to escape a natural disaster and a burning electric car blocks you? That's not the sustainable future everyone's promising.
It's a valid concern. Shows the need for what? Balanced innovation, maybe. We can't just use new tech without understanding the risks, especially when the consequences are huge.
Right, like don't let the perfect be the enemy of the good. Push the limits, but also be realistic.
Exactly. And that's where thinking critically comes in. Not just believing everything we hear. Ask tough questions, look at different sides, make smart decisions.
Which is what this is all about, isn't it?
Yeah.
We covered so much, IPOs, the Middle East, whoop and cough, even AI. But the takeaway, we're in a complex world, complex problems, no easy answers.
And that's okay. Stay curious, stay informed, keep asking questions.
Yeah, couldn't have said it better myself. That's all we have for today's deep dive. Until next time, keep exploring, questioning, and keep learning.
This material is intended for information purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities to any person in any jurisdiction. The opinions expressed are subject to change without notice. This information is not intended to be complete or exhaustive, and no representations or warranties, either express or implied, are made regarding the accuracy or completeness of the information contained herein. This material may contain estimates and forward-looking statements, which may include forecasts and do not represent a guarantee of future performance.